All right, guys, welcome back to the Independent Investor Channel. My name is Ryan. I've got a special treat for you guys today, just hinging on the edge of how transparent I can be on this channel. I'm going to roll out my entire comprehensive portfolio for you guys, at least my larger accounts, my taxable brokerage account and my two Roth IRA accounts. I'm going to lump them into one review for you guys, and I'm going to really zoom in on the holdings that I've got. So aside from just doing a 3 or a 5 stock pick video, I've got about 50 or 60 stocks in my portfolio, and hopefully within a few minutes I can provide you guys transparency on how the joint brokerage account has transpired over the last couple months of volatility. This has been something that I've been waiting to do, to add this piece to my portfolio. Really, the emphasis is dividend growth in that portfolio. And you'll see in the Roth IRA, number 1 and number 2, how I'm aiming for a 50-50 mix between a passive blend of ETF products from Vanguard and supplementing those holdings with a dividend growth strategy within the Roth IRA. So I hope you guys enjoy this. I'm going to jump right into it and we'll begin the review. All right, guys, I'd like to take the opportunity and welcome you guys into my taxable brokerage account. This will be the first of 3 reviews that I do in this video. This is my real account. This is not a spreadsheet that I've taken this information from. This is how the real numbers shake out, and I'm going to try to edit this so I can really zoom in on these holdings so you guys that are working mobily can really get a good idea. This is a very, very premature portfolio. It's just over 800 shares. Just over $50,000 that we've put to work here. Probably got a little over $35,000 just in cash in this account, just standing by. You guys know over the last month or so, I've been really engaging in a lot of different trading activity, which I've been able to generate about $17,500 just over the last couple months. So that's put me well over $20,000 for 2020, which beats my trading activity from last year already. So we're just in April at the time of filming this video. Why did I do that, and why do I disclose that? I really want you guys to understand that there's about $3,600 here that were in hawk in this account, but please understand that all of that $17,000 profit has been used to buy a lot of these positions, and this is kind of how things have settled out. So just imagine that $17,000 of house money has been rolled into these good quality value plays, and I'm very, very satisfied with how this thing shook out. We were really able to add some excellent dividend growth exposure. We were really able to supplement the portfolio with some single stock utilities holdings. First and foremost, Duke Energy and Southern Company, which are always on the top of my list. I have a very short list of utilities that I keep in the hopper. You know, 𝗋𝑎, Dominion Energy, Forties Company, Duke Energy, and Southern Company really always come to the top of that list. There are a few others that I really like, but I do own the Vanguard's ETF for utilities within the Roth IRA, so it's a really awesome way of grabbing a little bit more exposure to single stock in the regulated utility space, which is very defensive in nature. It just adds another wrinkle of dividend growth here. These will be qualified dividends, which is wonderful. It's exactly what I wanted. Unlike the position in Realty Income, guys, I just could not fit this into the Roth at this particular juncture, so I had to go ahead and enter into the position as I thought the entry was fantastic. I did not get the best price on this. As you can see, that's fine. I'm not a perfect investor. I do render very, very good results, but just didn't hit this on the bottom. If you got it mid 40s, low 40s, that would have been the optimal entry on Realty Income. But starting at the top here, Bank of America and Goldman Sachs were the two financial additions here in this portfolio. These are a couple positions that I don't own within the Roths, so I went ahead and added Bank of America and Goldman Sachs here. Morgan Stanley also on my short list of names, but again, looking to achieve best of breed, highest quality in any given sector and wanting to take advantage of the downturn in the financials, we went ahead and entered into BAC and Goldman Sachs. I really like BlackRock and I really like Blackstone Group here in financials. I really don't mind a Berkshire Hathaway right here in financials. Some of the insurers look quite good as well, but these are the ones that we opted for here to add the financials. Right below it, we had to have healthcare. Healthcare right now is probably my favorite. It's really in the driver's seat to benefit going forward. Bristol Myers Squibb, that was a balance sheet play. Fantastic opportunity. I've traded this stock many times in the past. I traded it last year for some very good profit. It ran up and was able to enter back into the position now. I think the only tech holding that I've got here in the portfolio is CRM Salesforce. So that adds a little bit of a wrinkle of high growth. So we added a nice position in Salesforce for cloud play. Also in healthcare, CVS. So you can see CVS and Bristol Myers. Those were the two that rounded out the healthcare exposure. Jumping over Duke, we talked about Goldman and then Honeywell in industrials. I did have JP Morgan Chase in there. That's the only double up position that I have, in that I thought that just got really, really oversold really quick. So the ability to jump into JP Morgan, well, it was a little bit more of a positional play for me. I do have a position of this in the Roth. But I did go ahead and enter into JP Morgan here at 50 shares. Leggett & Platt here in industrials as well. And then Raytheon Technology here. Just felt very strongly about their merger with Raytheon. So grab some more industrial exposure there. AT&T with regard to the telecom. Man, I lied to you guys. I entered into Travelers. That's also financials. That's a large Dow component insurer. So I actually entered into 4 financials in this, and then finally telecom here at the top with a 100-share position in AT&T. So with that, guys, we'll jump into Roth IRA number 1 and we'll continue the review. So this is a quick snapshot of my Roth IRA number 1. This is actually my personal account, and this is a lot more mature of a portfolio. Starting with Apple Computers on the top. Boeing has been a holding of mine for a long time. I just bought that at the wrong time, no doubt about it. So we're just going to hold those shares long. That's totally fine. We're not going to rotate out of it. And then Citigroup, one of the whole larger financial companies that I hold. Carrier, that was a result of the United Technologies triple split and merger. And Carrier shares, I've boosted up on this position a little bit because it was a pretty anemic position, and just decided to dump a little bit of cash in there. Just a little bit more speculation than anything, and really not wanting to sell the shares in Carrier Global right away. Who's to say, man? It might work out for me, and it's kind of cool to have some exposure to the air conditioning space, and so we'll monitor that going forward and adjust accordingly. Caterpillar, always just a cornerstone in my portfolio. I enjoy owning it. Disney company here, big position in Disney, has underperformed certainly, as most of these are still looking to recoup some of their losses that they've had, and that's totally fine. They will over time. This market is still extremely volatile, so you're going to see some pretty recessed positions in some of these, and that's fine. FedEx in industrials, Home Depot here right below that, and then IBM in technology, Johnson & Johnson in healthcare, Kimberly-Clark as well in the staples, so that's awesome. Coca-Cola as well in staples, McDonald's right below that, and then Otis was another one of those holdings as a result of the United Technology split and merger. So we received 15 shares of that, and I don't think I added anything to this. I'm just continuing to hold this. That's totally fine. I don't mind holding these and just kind of seeing where it goes. It's totally fine. Those were shares that split off as a result of the merger. Royal Dutch Shell here in the oil space. We'll skip over the joke. Anybody who follows me knows that 𝗖𝐋𝐈𝖖𝐊 was one that I bought maybe 3 or 4 years ago, and it's just kind of a joke in the portfolio, to be honest with you. And then Raytheon Technology. This is the newly formulated shares in that. So I've already previously disclosed a 50-share block in the other portfolio. And then it starts into my passive portfolio. But I'll jump to the bottom and just address that we've got Walgreens Boots Alliance here in healthcare, and then ExxonMobil as well in the oil patch. And then covering the passive portfolio, which is a good bulk of this portfolio. It's nice. We've got small cap exposure. We've got real estate. This is a specialty REIT that we have, 𝑉NQ, 𝑉PU, which is the Vanguard's utility, 𝑉WO, which is emerging markets, 𝑉YM, which is high dividend yield, domestic, and then 𝑉YMI, which is high dividend yield international. So that's the portfolio renderings for Roth IRA number 1. I'm going to kick you over to Roth number 2, and we'll finish out the comprehensive review. All right, guys, so this will round out the trifecta portfolio review. This is just another account. This is the third and final account that I'll review today for you guys. These are the larger of the accounts. This is the final Roth IRA account, starting with Cisco Systems and Technology, and then Corteva, and DuPont, Demours, and Dow was a result of Dow DuPont splitting off, and then Corteva was one of those holdings that split off. They're in the agricultural and fertilizer business. It's actually quite good. I like everything that I've read about both Corteva and DuPont. So we're keeping those as some materials exposure. That's kind of a difficult sector to justify going after. It's my least favorite, to be honest with you. But nonetheless, we'll grab a little exposure by owning these three, and I've owned them ever since they did their tri-split. So that wasn't by choice that I have shares of both Corteva and DuPont Demours, but the nice dividend on DuPont for sure. So we'll continue to enjoy those. Chevron right above it. I took a little bit more of a position within this account to get me a little more exposure here to Chevron, so that's kind of cool. And JP Morgan Chase, so you can see here that I've doubled up on this position here, which is fine in the broker and holding it here as well. So very interesting to see how I seek out my exposure to the stock market. Kraft Heinz, that's starting to make its comeback, which will be great. 3M in industrials. We have Merck. We have Microsoft, which is my largest single stock holding in this portfolio, close to 40 shares there of Microsoft. Right below that is Pepsi, which is also one of my more sizable positions within this, and Pfizer, which has done quite well. It's one of the rare bright spots in the portfolio, actually, has finally climbed into the green. All of these will. I'm just sitting back and being an investor right now, allowing these positions to kind of compound and catch up with themselves, and let the volatility kind of come down and let the market calm down a little bit and allow some of these positions to do what it is that they do. I think earnings are going to be a mess here for a lot of these companies. So we're just going to continue to hold true, and it's easier to hold true when you hold as much quality as I do here. Visa in technology. For fintech, so that's kind of cool. We got shares of Visa, 15 shares there, and then I will jump down, and I've got Verizon and Wells Fargo and Walmart here to round out the single stock exposure for dividend growth. And then the passive aspect is comprised of just 3 ETFs. Of course, the largest position is in the Vanguard's index ETF VOO, with just over 100 shares there. VEA, which is international, European developed markets, etc., with just over 101 shares there, and then a small cap growth fund here, VBK. So really hope you guys enjoyed this comprehensive review. That was a lot of stock picks just to fire at you, but I haven't done one of these for a long time, and it might be of interest to you guys to understand how I seek my exposure to the stock market. These are real numbers. These are real unrealized gains and losses in these portfolios, so you guys can critique as you will. And but hopefully you guys enjoyed seeing how one of your fellow investors seek out his exposure to the stock market, and hopefully you found some real value in it. So with that, guys, I'll kick you back to YouTube, and we'll finish out the video. All right, guys, so we've come back out of the portfolio review. These are my larger accounts, the taxable brokerage and the 2 Roth IRA accounts. I think for a lot of beginning investors, it can really help understanding how somebody like myself seeks our exposure to the stock market. I think it's a new era of investing in that you have YouTube creators that are willing to come on and share with an audience how I seek my exposure to the stock market. Now, no portfolio has to be the same, but it's really interesting and intriguing for somebody who may be interested in investing or looking at building their portfolio for themselves. What are your options? What does a mature portfolio look like? What type of investor should I be, and how should that reflect in my portfolio? For example, the ETFs on the passive side and the more active portion of the portfolio through dividend growth investing through some of my dividend plays. So if you guys appreciate the message, you want to subscribe to the channel, please do so. Leave your comments at the bottom of the video and share the video with anybody out there that you know that can appreciate taking a look at a portfolio that's taken many, many years to build up. And I provide that transparency to you guys with the sheer intent of helping investors improve upon their financial posture. Guys, thank you so much for tuning into the video, and good luck in your investment future.